With rates not budging, is the Phoenix housing market up or down? Today, I'm giving you the lowdown on the July 2023 Phoenix housing data you need to make an informed decision as a buyer, seller, or renter here in the Phoenix market. Be sure to stay tuned to the end to hear about how the Phoenix economy is faring overall. Hey y'all, welcome to the Living in Phoenix, Arizona channel. I'm Heidi Littleton. If you are new here, this channel is about all things living, eating, playing, and working in the Phoenix, Arizona area. If you're not new here, welcome back. Don't forget to hit the subscribe button and the bell so you get notified anytime I upload a new video. Let's get this out of the way. Mortgage rates still suck. They really haven't moved much right now. We are hovering around low 7s for conventional and mid to high 6s for FHA. We've all been waiting for them to come down. There's a lot going on right now, so hopefully we will see some movement in the next couple months. They are just really volatile right now, and they seem to be astonishing even the best analysts, as there sometimes doesn't seem to be a rhyme or reason for some of these increases that we see. If you're a buyer, the best thing you can do is lock in your rate when your payment feels comfortable for your budget. Trying to time the market could significantly harm your purchasing power. So what does that do? What that does is put a pinch on our demand. And so what we are seeing is restricted contract activity. If it loosens, we will see a release just like we did last year. Now let's chat about FHA buyers. FHA is really coming to the forefront for purchases under $600,000, especially with the new limit increase to $530,000. You can see we went from 10% in June 2022 to 22% in June 2023. Cash has gone down to 19%, and there's been very little change in conventional. That tells me that when cash investors pull out, FHA buyers really benefit. As an FHA buyer, you are now able to compete. Take advantage of this. Let's take a look at the Cromford Market Index. As a refresher, the Cromford Market Index provides a short-term forecast for the balance of the market. It looks at trends in pending, active, and sold listings compared with historical data over the previous 4 years. A value of 100 indicates a balanced market, which means our appreciation will be in line with the rate of inflation. Values below 90 indicate a buyer's market, and appreciation will likely be negative, while values above 110 indicate a seller's market, which means appreciation will be higher than the rate of inflation. We are currently at 161, and yes, we are seeing a decline, but don't get worked up about it yet. What is happening is our demand index is falling faster than our supply index, but they are both declining, and this is in response to the high mortgage rates. In the grand scheme of things, it is in line with 2018. This isn't a plummet, it's a gradual decline. So who should be concerned about this? Not those who plan to hold long term. Those who are flipping homes, you need to be more thoughtful about your acquisitions. Make sure they are really, really good deals. The market has slowly lost some steam, but we are still in a seller's market. We are not seeing any sort of price decline. Queen Creek has dropped back down to a balanced market. Casa Grande and Litchfield Park are also in balanced markets. Buckeye has had our largest increase into a seller's market. So let's get into the nitty-gritty. Active listings were down 2.6% from last month. This is down 39% from this time last year. Yikes. However, we are seeing a leveling off of supply. Closing counts were much stronger in the new home market, up almost 8% from this time last year. Pricing was also higher for new builds than a year ago, with a median sales price of around $533,000, an all-time record high price. The builders are loving the fact that supply is so weak in the competing resale market. This is the opposite of where they were in 2009, when they had to cope with a flood of bank-owned and short sale homes at rock-bottom prices. This actually made new homes look very expensive, especially as resale homes were changing hands for less than their rebuild cost. The monthly median sales price was $439,000, which is down 4.6% from last year. As you can see from this graph, from February to July, we are actually up 4.8%. We did see a slight dip in our median sales price, so July was actually down 1.3% from last month. Is this a worrying sign of weakness? Not really. It is a seasonal effect caused by the relative absence of luxury property closings during the third quarter. It happens almost every year. Luxury closings peak in May and June, and after that, people who can afford luxury homes usually find ways of not being in central Arizona in July and August when temperatures tend to stay over 110 for long periods of time. I don't like moving in during that weather. Homes that close during July and August tend to be smaller and cheaper, designed for us regular folks who have to put up with the heat. Once we get to the end of September and it starts to cool down, the luxury market will be fully contributing to the sales numbers again, and we will probably be reporting positive annual appreciation once again. And as you can see, we are already seeing an increase in August, but this is only like 7 days into the month, so we can't really predict a whole lot. From a long-term appreciation perspective, 57% of all of our active resale listings were purchased more than 3 years ago, which means most homeowners have a nice chunk of equity to use towards a new home or help a buyer buy down their rate. Let's chat about seller concessions and over-asking sales. With high rates, we are seeing about 41% of sales include seller concessions, which is in line with 2019 and is normal. What's abnormal is the amount. We are seeing about $8,000 versus the typical $4,000 to $5,000. This is due to the cost of rate buydowns. The positive news, buyers are meeting sellers halfway. We are starting to see more closings over asking price, about 22%, and the price over being about $5,000. Most concessions and closings over asking are within that $300 to $600 price range. Let's chat briefly about the rental market. Median rental in Greater Phoenix for a single family in the MLS is $2,250. And yes, it has risen a bit. So how does that compare to buying? For a standard 15 to 2,000 square foot home, you're looking at about a payment of around $3,000. And with an FHA loan, with a 2-1 rate buy down, you're looking at around $23.65. Remember, FHA rates tend to be lower and they do allow for more seller concessions to buy down that rate. Be sure to check out my other video discussing in more detail renting versus buying and the benefit that many have forgotten about that is now making a comeback. One thing that is also going up is rental supply. We currently have 49.8% more active rental listings than we did 12 months ago. About 800 of them are in Scottsdale and their average asking rent is $43.80. This time last year, there were only 517 with an average rent of $42.90. So why isn't the supply increase affecting rental rates? When we look at the price per square foot, we are seeing bigger homes come on the market, which also means higher rental prices. So we are actually seeing that rental prices per square foot have not moved much for 2 years. Sellers. Median days on market before an accepted contract is currently sitting around 20 days and is really stabilized, which is a little closer to normal. So make sure you adjust your expectations accordingly. I want to close out by chatting about the overall economy in Phoenix. We are still very hot economically here in Phoenix. It is really overwhelming the expansion and attraction that's happening fiscal year 2023. The number of new companies and jobs is insane. Battery facilities, semiconductors, headquarters, and spaceship building. These are high-paying manufacturing jobs. We are also not seeing a whole lot of unemployment here in Phoenix. This is all very, very positive for Phoenix and our economy. As always, if you have any questions about the Phoenix housing market, don't hesitate to call, text, or email. All of my contact info is below. If you found this video helpful, don't forget to give it a thumbs up and subscribe to my channel for more updates, insights, and the latest Phoenix real estate market data. Until next time, happy house hunting.